Welcome back, viewers. You're watching the Savera. I'm Shefali. The recent amendments in priority sector lending guidelines by the Reserve Bank of India should further help the economy grow faster and fine-tune the building blocks of the factors of production, mainly the MSMEs, agri and allied sector, housing and exports, etc., a report by SBI Research said today. The RBI this week issued revised guidelines on PSL to facilitate better targeting of bank credit to the priority sectors of the economy. The new guidelines will come into effect from April 1. According to the report, the revised PSL guidelines cater to enhancement of several loan limits, including housing loans for enhanced PSL coverage and broadening of the purpose based on which loans may be classified under renewable energy. This is also a revision of the overall PSL target of Urban Cooperative Bank to 60% of adjusted net bank credit or credit equivalent of off-balance sheet exposures whenever it's high. The higher limits set in housing segment should have a fillip to low-cost, affordable housing across various population cohort, in particular Tier 4, 5 and 6 cities wherein the banks along with the non-bank payers can find their next gold mine given the surge in demand for own or individual housing post-pandemic, the report noted. Explicit recognition and prioritization of the renewable energy within the PSL framework has alleviated credit constraints. Thereby, escalation in the share of non-conventional energy credit to the overall energy credit, encouraging credit flows to an NCE sector that witnessed significant policy interventions too, the SBI report mentioned. As big banks continue facing problems in achieving PSL targets, it would be a prudent move to include all infrastructure loans given to road projects, port railways, airports, energy sector highways, etc., either as priority sector status or be exempt from calculation of ANBC for PSL achievement in line with infra bonds raised towards funding of infrastructure and affordable housing, according to the report. The RBI has also increased the loan limit for the repairs of damaged dwelling units in the revised circular. This opens new opportunities for credit disbursement for FIs in one of the most secured niche areas, also lessening the burden on homeowners in search for liquidity to carry over the necessary repairs of their dwelling units in need and thus opens up a substantial market for credit offtake, the report said. With its 500 GW non-fossil fuel installed capacity target of 2030 and net zero target for 2070, India has embarked on one of the most extensive renewable energy expansions in the world. On July 1, 2015, RBI has expanded the ambit of PSL norms to include loans up to ₹15 crore to borrowers for purpose like solar-based power generators, biomass-based power generators, continue micro-hydel plants and non-conventional energy-based public utilities. The limit was subsequently raised to ₹40 crore per borrower on September 4, 2020. In the recent guidelines, the limit was raised to ₹35 crore per borrower. For individual households, the loan limit will continue to be 10 lakh per borrower. Though the increase of ₹5 crore appear to be small as compared to revision made in last 2020, the small policy interventions definitely will go a long way for the NCE sector to achieve dual objection of clean energy and PSL to boosting lending the sector. That was all for now. For more updates, download the Savera app, follow us on Facebook, Instagram, Twitter and YouTube.